Hi, fellow traders. What's happening? I hope you guys had a great day today. Now, some of you've already seen this picture before, and you understand 100% how it relates to trading. But this picture represents the lesson that I was trying to teach you guys this morning in the community. And if you haven't, the message is the power of walking away. And this picture illustrates how powerful it is for if one person walks away, they stop the fire. And a lot of times that just you walking away can stop the bleeding. Or in trading, what happens if the market's just not there like it was this morning? The setups weren't there for me. And I was sitting here, and the more I sat here, the more impatient I got. That fire started burning. And before I know it, it was beginning to rage. So I had to walk away. Had I not walked away, I probably would have burned through everything, and I wouldn't have had anything left to take advantage of the opportunities that the market had in store for me today. But you could also look at this another way. There are days where we take a trade, it doesn't go our way. Or take yesterday, for instance, for me. I get in a trade, and I take profit, and then it comes right back and stops me out. And then instead of me keeping my wits about me, I start raging. I want to get revenge, and I just start burning up. And if I don't walk away, I'm going to burn through everything I got that day. We're not going to have anything left. So what you saw me do this morning is I checked out early. I took an early lunch, and I came back early. And when I came back, the market was ready for us. Well, pretty much ready. We had to deal with a little pain, but the market was on the right track. So what I mean by that is, if you look at this spy here, and since I would say 99.9% of the stocks I trade are part of the S&P 500. I don't trade, penny stocks or any of that other garbage stuff. I trade the listed stocks, or mid to higher cap stocks. And so 99.9% of them are going to be in the S&P 500. So we follow the SPY. That's just my gauge of the market. This is the ETF for the S&P futures. So I'm looking to this to give me the health of the market. And you could see how it kind of traded this morning. And we get to the open, we put in a tight range. And oftentimes when we put in a tight range on the first 5 minutes, the market's going to be pretty good. But as you could see, we really didn't get much. We didn't get much out of the market. Didn't get any real opening range setups in the stocks that we were watching. Now, there's always going to be opening range moves in other stocks that may not have been setting up at the open, but they just start running at the open and all of that. We can't chase those. We don't have a way to just chase those, because we'll be running from behind all day. So I'm looking at the stocks that were in play this morning, that were on my scan, and that I put into play, and they just did not give us any opportunities. So, and everybody kept wanting to trade, and I kept saying, wait until we get established outside of this window here. Always, I want to try to wait for the market to establish itself outside. I was getting tired of waiting. Everybody asking about wanting to trade was making me antsy. So I had to get away. I was not going to force a trade in the market or do something and give away money when I didn't have to. I had to be the example. take an early lunch, walk away. And when I came back, which is around this time, the market, to me, it was ready. So that's when we got engaged. But you could see it kind of pushed up against us, and our stock, you're going to look at it in a minute, ran up. We just had to deal with a little bit of pain. But this brought another solid lesson to light. You have to make sure that you allow your trade enough room to work. That you position yourself with your position size or whatever you need to allow your trade enough room so that it can retest the levels and potentially reset up. If you don't do that, you're going to get stopped out. You have these tight stops that you end up getting stopped out. Then you get pissed off when the stock turns around and works and goes in your favor. And then you're going to blame everything and everybody but yourself for not putting the proper stop in place. And really, that's whose fault it would be. It would be your fault for not understanding where you needed to put your stop. So let's take a look at ROKU. This was the trade I took. And again, if you have a stock, and a lot of professional traders have their, every now and then they'll have their stock that they just dance with because they're just in rhythm with it. And I've had several stocks over the last couple of years. ROKU has been it for this last year. And whenever it's in play and it looks okay to me, I'm going to dance with it. And, that's what I did here. So when I got back from lunch, the market was starting to look good. So we got in the trade. We got in, it looked pretty good. And of course it bounced. Now, yeah, I was waiting to get in under this daily level, 94. I was waiting to get in up under it. I could have gotten in up here on this rejection, but I wanted it to get through all the moving averages. I wanted a clean chart. I like clean blue, and it's not blue skies because we're not going up, but I need clean dirt. I need virgin land that I want to see coming down. And I waited, and that was it. I was ready to take this because the market was outside of its range. It was looking good. But like I said, this level is what I was waiting on. But this is not the technical level that I'm basing the trade off of. The technical levels are going to be back here where the stock rejected. And I know this is a good amount away. This is just over $1 away. But you have to give it that much room. And if you have to reduce your position size, if I said I'm not going to take a $300 loss or $350, $75 loss, I'd have to reduce my position size. I'd have to go with 200 shares or 150 so that I could give this enough room to make the move back up. So putting the proper stop in place. And there's several elements that we use in terms of the stop, because the trade, the setup, a lot of stuff is going to be different. So it's really catered to each individual trade as to where you're going to put your stop, how much room you're going to need to give it. We use on the previous 6 candles to figure an ATR to make sure that we won't get stopped out on just the normal volatility that the stock has exhibited in the last 6 candles. So a lot of things have to go into place. And here we bounced. We sold off. Didn't quite get to my first target, My first target was 93. Whole dollar mark, because the next daily level is down here. This was my final target. So I had to pick whole and half dollar marks in between where we are here and my final target so I can lock in profit. You know, I'm not Superman. I can't sit here and hold a day trade and watch it try to trade through all of this. You know, I'm patient, I'm calm, cool, and collected, but I'm not Iceman. That's a better analogy. I'm not Iceman. So I have to lock in profit at strategic points along the way. Because the first time I lock in profit, I'm happy. I've got money in the bank. It can go back and stop me out and break even fine. No problem. I can reset just like we did yesterday. We remounted it and locked in some more money. But here, just made a beautiful move down. It hit my targets. And I did short shift this. I wanted 91.50, but for some reason I spooked myself out at 92. And I ended up just taking some at 92, which wasn't bad because it was $1 away from this target. You know, I got some positive slippage on this, which was a good thing. But I could have waited, and this thing did hit 91.50, but you know, I just got spooked out. Here we were setting up for another little bear, kind of like a bear flag here. So I wasn't worried about this thing bouncing. I figured we would hit my target. Now we hit it a little bit sooner than I thought. I was thinking around 3 o'clock. But we had a nice big sell. And what I used to do is when I started to see it coming like this, pull this order and sell half here. And then I would have gone down to this next level, this 88.92 level, and waited to see if we would get there. And I would have missed it by about 10 cents or 20 cents from my order and come back at the end of the day and get stopped out. That's what has been happening to me last month. So I decided, stick to your plan. Don't change it up. All we want is the meat of the move. If we catch the meat of the move, we locked in some money, really good money for trading a smaller share size, and we're ready to go. The next trade, if we get another trade, great. If not, you know, so be it. So all we did was trade the trend here. That's all we did. And there were several other entries that if you didn't get in here, or even if you got stopped out, there were several other entries you could have gotten in and pretty much got the same trade. You know, I was just in a little bit early because the market invited me in, just shook me around a little bit, and then, you know, we made that move. So, sorry about my dogs. The neighbors just came home. Stop it. So 524.62, not a bad day. We were patient. You know, I had to walk away because I was getting a little antsy. That fire was burning inside. I had to walk away, come back, and when I got back, the market was ready for me. Sometimes you just have to do it. If you have a bad morning with 2 or 3 bad trades, walk away. Don't let that fire keep burning. Walk away. Let it put itself out. And then come back, refocus, and attack it. All right, so that's what I wanted to share with you guys today. I hope you had a great day. Enjoy the rest of this Wednesday. And we'll come back tomorrow ready to rock and roll again.